Hello, everyone. We're going to get started here in just a couple minutes. As you guys get logged in, feel free to chat. Let me know if you can see my screen. If you can hear me talking, feel free to say hello, ask questions. At some point, we'll get to those questions, even if it's not relevant to today's session. If you guys have questions about last week's sessions or any other sessions as it pertains to day trading, feel free to chat that in. Just another minute, we'll get started. Thank you, Jordan. Appreciate it. Awesome. All right, let's go ahead and get started. Appreciate you guys being here. Welcome to the Proving Ground Mastermind. We're picking up on the 4-part series that we started a couple weeks ago, so this is the third part. The first part, of course, was choose a setup. And so we established a random one, and we're going to have to go back to that because there's not really a lot of time within this process to cover that, but we are going to go back to it. So after the 4-part series, we're going to go back to our setup, and then we're going to work on how we identify that setup, what parameters we choose to use, and then obviously back test it. So we'll go back to that. But choose a setup, and then we talked last week about back testing the setup, and we use the golden ratio analysis for that, of course. And then today we're going to talk about execute. So, and there's a lot that goes into execute. And so we're going to talk a lot about that today. And then the next is going to be rinse and repeat. Now, a rinse and repeat, that's more than just simply going back and back testing something else. There's a process that you should follow that will lead to success. And so we'll talk about that next week. But today we're going to talk about execution, right? So before executing, you need to ask yourself the following questions, okay? So to this point, you should have had a setup, right? And within that, you're very clear as to what your parameters are, right? Yes, maybe, no. Your yeses are yeses, your maybes are nos, and your nos are nos, right? So we have a clear yes as to what we're looking for. And then we back test it for the times that we have committed to trading on one currency pair at a time over the course of 5 years, which is the proving ground, right? And then we have our stop loss and our take profit and our risk percentage, okay? So we have these things established at this point, okay? And before executing, ask yourself the following questions. Is this my setup? Very simple, right? Is this the setup for which I've backtested? Are all of my parameters there? Okay? And it's either yes, it's maybe, or it's no. And you guys know how to deal with each of those at this point. Only your yeses are yeses. So is it your setup? Yes. Okay. Period. It doesn't matter if there are other underlying circumstances, with the exception of announcements. There shouldn't be any underlying circumstances. Yes, this is my setup, right? Is this the time of day for which I've backtested? You find your setup, and then you ask yourself, am I just looking at the market and I happen to see my setup? Or is this the time specifically that I've backtested for, right? Is this the specific time? Is this the currency pair with which I've backtested? Am I looking at a different currency pair? Am I looking at the currency pair for which I've backtested? Am I looking at the time for which I've backtested? Am I looking at the setup for which I've backtested, right? What is my stop loss? So now you're getting ready to pull the trigger. Immediately you can ask yourself, what is my stop loss, right? What have I determined to be my stop loss for this setup based on my backtest data? And what is my take profit? Based on my backtesting, what have I determined to be my take profit? Based on my risk percentage, what is my lot size? So if you're risking 2%, you got a $2,000 account, it's $40, right? Okay, so let's just say you've established your setup, and let's just say it's half top. It doesn't matter what it is. Let's just say it's half top, okay? And You know all the parameters that you've tested for the half top, right? All the ones you're very clear on, okay? All right, yes, that's half top. And yes, let's just say it's 8 p.m. and you backtested from 7 to 9, 7 p.m. to 9 p.m. So it's 8 p.m. Yes, half top is present. It's going to be 8 p.m. soon. Currency pair, let's just say Euro USD. Yes, this is the currency pair for which I backtested. Your stop loss, let's just say your stop loss is 10. Okay, got that. Take profit, let's just say it's 10. Got that. Okay. What is the risk? Let's say we have a $2,000 account and we're risking 2%. Okay? And that would equal $40, right? Because 1% is $20 and 2% is $40. $40. So what lot size do I use to equal $40 and 10 pips? Right? A 0.4 lot. So my lot size equals, should be a O, equals 0.4. Okay? I want you guys to look at this for a moment. And I want you guys to think and ask yourselves, what else do I need? At this point, what else do you need? I want you to take a moment and think about that. What else do you need? You have your setup that you've backtested for a specific time on a specific currency pair. You know exactly what your stop loss is. You know exactly what your take profit is. You know what you're risking, so you know exactly what your lot size is. You know, you have everything that you need right here. Is there anything within the mastermind? I'm not talking about the whole, I'm just talking about just the mastermind. Is there anything within the mastermind that does not equip you to have every single one of these things that are on the page right now? Your setup, the time in which you trade, the currency pair in which you trade, your stop loss and take profit, your risk percentage, your lot size. You may ask, how do I determine my risk percentage? There's an answer to that, but I'm not going to tell it to you unless you ask it. Okay? How do you determine what your risk percentage is based on your win percentage and your risk to reward? There's an answer for that. We have a structure for that, right? How do you determine what time is best for you? We've talked about that. How do you determine what currency pair? We've talked about that. How do you determine what pattern? We've talked about that. So everything that you have at your disposal right now equips you to be a 7-figure day trader. Okay? So you have all of this information. You have everything that you need. This is a full 100% trade plan. Okay? Not 100% win, just a 100% trade plan. It is complete. It is absolutely complete. There's no question about it. There's no, question mark somewhere hidden in here that you're uncertain about. You are absolutely certain about your setup. You're absolutely certain about the times that you've dedicated to trading. You're absolutely certain about the currency pair that you backtested on. And based on that information, you're absolutely certain about your stop loss and your take profit. You're absolutely certain about your risk percentage and your lot size. You have absolutely everything that you need. The only thing that's left to do is to push the button at the right time. That's it. Based on your back testing, that could be right at the top of the hour. That could be positioning. It could be whatever it is, right? But now you're ready. This is all you need. This is all you need. 7-figure day trading. Okay? Based on my risk percentage, what is my lot size? That was the last step. So we have our lot size. We push the button. We set our stop loss and our take profit, and then we walk away. We don't stare at it. We don't obsess over it. We just walk away. Put our phone back in our pocket, walk away from our computer, whatever it is that you're using to trade. You've got everything that you need. Okay. Now, once your parameters are set, what is the next thing to do? Right? What's the last thing we do? Press the button. That's it. buy or sell. Okay? And guys, we've made it even easier than that, right? We've made it even easier than that with the mastermind. How have we done that? Well, we've created these scripts, and you guys have access to these scripts. And you can say, okay, if we're risking, say, 2%, right, with a 5 pip stop loss and a 5 pip take profit, right, we can go into a 2%, and we could use, I could even modify these. So I have a buy with a 5 pip or 10 pip take profit, 10 pip stop loss, or I can set it for whatever I want and at whatever percentage, right? If I go in here and I modify, let's just say I'm going to use risk percentage. Let's just say I'm going to use 2% risk, right? And my stop loss is going to be 10, which is 100, and my take profit is going to be 10, which is 100, okay? And I'm going to use 2%, right? So then what I'll do is I'll go in here and I'll save this, save as, and this will be for a buy for 10 and 10. And then I'll save it, right? I'll go back in there and I'll do this one. $100 because that's 100 micropips, right? 2% risk. And then file, save as. 10, 10, save. Watch this. There it is. So let's say I want to sell, right, for 10 and 10. Look at this. Double click. Boom. Look at that. Put me in for a 10, right? There's 100 micropips right there. 100 micropips, that's a 10 and 10, and 188. So $18.80 times 10 is $188. So what is 1% of 93, roughly, right? 93. So that's going to be about 93 bucks, right? 1% of 9,396. This is just a demo account. So this would be about 93 bucks, right? Okay, what's double that? 186 bucks. Okay, if we rounded it up, it'd be about 188.8 or whatever if you counted all these other numbers. And what is that? 1.88 at 10 pips, $18.80. 10 times is what? $188, right? Which is 2% of 9,396.56. Did I have to do any math? No, because I already know what my setup is, what my stop loss and take profit are, what my risk percentage are. So I could just set this thing up right here, and then I don't have to think about it. Then I just come in and I just press the buy or the sell. I double click the buy or the sell, and it automatically puts me in for my stop loss and take profit and uses money management to determine what my lot size should be. I don't even have to think about it. It does not get any easier than that, guys. This is easy. This part's easy, right? Once you've done the back testing, simple becomes easy. Back testing is simple, but it's hard work. After you're done, day trading and executing your trade becomes easy. The hard part is overcoming the psychological facets, right? The psychological facets of day trading, okay? So we press the button. That's the hardest part sometimes. There's a lot that goes into that, right? So let's talk about that. Don't take trades you haven't back tested. Don't take trades you haven't back tested. Don't take trades you haven't back tested. This includes, but is not limited to, alerts, on it, AIT, SAT, and the like. Don't take these trades if you haven't back tested them. It's very simple, right? There was this SNL skit. I don't know if you guys ever watched it. What's the guy from Roxy? Cobes? What's his name? Steve Martin. Yeah, Steve Martin. He started in this skit through SNL, and it's called "Don't Buy Stuff You Can't Afford." It's the funniest thing, right? You guys got to watch it. It's hilarious. And there's this like guy, and he's selling his book, and Steve Martin is sitting here going over balancing his checkbook, and he's like, man, we don't have any money, right? We're in debt. We have all this debt, and this guy comes and says, oh, I can help. I've got this book, and oh, that's great. What is the book called? It's called "Don't Buy Stuff You Can't Afford." And he says, okay, so what if I go to the store, I don't have any money, but I see something I really want. Should I buy it? And the guy says, no. And he says, well, I'm confused. I don't get it. He says, read the book. It's only one page long. You open the book, it says, don't buy stuff you can't afford. Right? So it's kind of the same thing, right? Don't take trades you haven't backtested. Well, what if I see a trade in a different currency pair and it looks great and everyone else is taking it? Should I take the trade? No. Right? Don't take trades you haven't backtested. It's simple. It really is that simple. Right? Alerts, on it, AIT, SAT. I don't care how gifted or great the coach is. Right? It doesn't matter if you respect them. It doesn't matter if it's Kevin Jones Jr. It doesn't matter if it's Matt Pohl. It doesn't matter if it's Dale or Troy or any other coach. It doesn't matter if it's me or anyone else. If you have not backtested, you have no business taking that trade unless it's in demo. Take it in demo all you'd like. Right? What you should be doing is gleaning from how they analyze the indicators, how they look at them, and glean from that and see if that's something that benefits you. Right? But don't take those trades. Don't remove or modify your exits, such as increasing, decreasing, or removing your take profit and protection, i.e. stop loss, hedge, etc., unless it is part of your trade plan. So if you have backtested and you're backtesting, based on your backtesting, you see that you can set a 10-pip take profit, but after a certain amount of time, if you're in profit but not 10 pips or whatever it might be, that you can now move your stop loss into stop profit, so that if the market does come back, then it takes you out, minimal loss or minimal gain, but you don't have loss, right? Because after, say, an hour of being in that trade, the likelihood of success decreases, right? Or that if something based on your backtesting says that you can actually continue in that trade, then you can increase your take profit to a specific area or whatever it may be. But that's all based on your backtesting. None of that is just having some harebrained idea and going with it, right? Or getting greedy and trying to do something that your backtesting does not justify. So again, backtesting is day trading. Do you guys see that? If it doesn't say so in backtesting, you don't do it. Therefore, what you're doing, if you're not basing it on backtesting, is just throwing in trades like you would go to a craps table or a roulette table in Vegas and lay your chips on a number, right? And then you just smoke that hopium and hope that you get the result. Okay? Let's move from hope to give you a mathematical certainty by backtesting. Backtesting is day trading. Everything else is just executing the day trade plan. So don't do these things, okay? Unless it is part of your trade plan. Don't add or subtract elements to your trade setup or plan. For example, adding another parameter to your setup that hasn't been first backtested, right? You get this perception that when the TNTs look a certain way and you've got your setup, TNTs may not have anything to do with your setup, but when they look a certain way, maybe the TNT you're taking a buy, but the thick orange is flat and at negative 100, and you're thinking to yourself, well, that's a flat top, so I'm not going to take this trade, or I am going to take this trade because that just gives me more validation, even though there are other aspects of my actual trade setup that are not present. So you can't just supplement or swap out, right? The worst thing that could happen in that situation is what? That the trade works out, that you do something you're not supposed to do and it works. That is the worst thing that could happen to you, believe me, right? You would think, oh, well, I made profit, right? But that same habit that you now have seared into your brain because you got that dopamine effect when you won something, doing something you're not supposed to be doing, right? Like when you're a kid and you steal a cookie from the cookie jar, you get that little bit of rush. You get away with it. Guess what? Next time there's cookies in that cookie jar and you want one, you're going to get one until you get busted. And when you get busted, you're going to realize it wasn't worth it. It wasn't worth it. Don't reward yourself for pissing on the carpet. Right? Otherwise, you're going to think it's okay to piss on the carpet. Don't do it, because it's those same things that cause for us to lose in the markets. One of the things that we tell traders that have existed as traders prior to coming to us is, if you are not willing to forget everything you know and allow for us to retrain you, then this is not a good fit. You should not give us any money. You should just go away. Don't waste our time. We don't want to waste any of yours. That's what we tell them flat out. If they're traders, that's one of the first conversations we have with them before they've even looked at content as a trader light. We may not ask you to, but if there comes a point where we ask you to forget everything you know or forget things you know about trading, and you're not willing to do that, if you have something in your head that you think, oh, this works really well, but I need to figure out how to make it profitable because I can make a bunch of money with it, but when I lose really big too, right? And they think, if I come here, maybe they can teach me the part that I'm missing. And really the part that you're missing is that thing is actually what's causing for you to lose, right? Because they've got a 100 pip stop loss and a 10 pip take profit, and they win 90% of the time, and they think, I'm always winning, but that loser kills me. What can I do to mitigate that loser and then still keep all those winnings? Well, don't do that, right? Because one loser offsets all those winners. So don't do that, right? But sometimes it's hard to pull that from someone because they don't get it. They don't understand. Don't create that for yourself. Don't do things you're not supposed to do. Otherwise, you create those habits and you're convinced that they work, and those are the same things that keep you broke. Slow and steady up and to the right. That's how you get there, right? If you try to do it some way different, you might get lucky. If you get lucky, you make a bunch of money, quit then, walk away, don't risk any more. And then you'll be a winner, but you're not going to do this for a living. You're not going to change your financial trajectory. You're not going to quit your job. You're going to get some come-ups. Maybe it betters your life. Maybe you're able to pay off your house with it or something. Awesome, great. Do that and then quit because you're going to lose. Or do it the right way, right? Pay off your house, buy a bigger house, whatever, right? Get 7 figures out of this thing. So don't add or subtract elements to your trade setup or plan. Don't allow someone else to trade within your live account. This is stupid. Don't allow someone else to trade within your live account. Just don't do it. Doesn't matter who they are. Not me, not anyone. Never allow anyone to touch that. It'd be like giving somebody your credit card and saying, okay, here you go. Spend it wisely. Right? Don't do it. Don't allow someone else to trade within your live account. And don't trade somebody else's. Believe me, you don't need that headache. It's a whole other realm of psychology that you need in order to trade someone else's money, like friends, family, things like that. There's no shortcuts, guys, and I've seen it a million times. And some of you guys might be here that are considering doing that or are in the process of doing that, and you're realizing, those of you that are doing it, you're realizing what a mistake it was and how much of it just makes you a worse trader, right? Because you second guess yourself and you've got all this extra pressure and you thought that you could handle it. Maybe you think that you can overcome it, but you won't. You won't. When you take the loss, it's going to affect you more than it will your own money. And think about how much your own money affects you. It doesn't matter how good you get at this, just don't do it. Look, guys, people that you trust to invest for you, right? You go and you invest in a mutual fund. You go and you get someone to invest your 401k or whatever it may be. And guess what? They have zero skin in the game. None. Matter of fact, they get incentivized just to put your money where everyone else puts it, and they have no liability. They make you sign all kinds of stuff, right? If you lose, that's it. You lost. It's not my fault. So what the hell are you doing then? What is your purpose then? What is that person's purpose? That person's purpose is to get paid whether you win or lose. That is their purpose. Believe me. Ask anybody that's ever gone to school for this stuff. Anybody that's ever gone to school for finance or for investing. They don't teach them how to trade. They start trade accounts and they play in the market and they have these little, competitions to see who can earn the most. But none of that actually translates or applies to real life. They don't do any of that stuff for you. None of that. Believe me. And then for those of you guys that know, you know what I'm talking about. And some of you guys might even be those people or have been those people that invested for other people. You get a commission whether they win or lose. You get paid whether they win or lose. You have zero skin in the game. You have no motivation to make sure that they make money. You don't. You can feign it, right? But you have no real skin in the game, right? You could, be a good person and try to help them out, but at the end of the day, you're going to get paid anyway, right? That person is going to get paid anyway, whether they help you make money or not. They're going to get paid anyway. That's not a partnership you want. Again, don't allow someone else to trade within your live account. Don't trade other people's accounts. Believe me, it's a mess. It's a headache. Don't do it. Okay. So here are some common psychological barriers, and we've talked about this in other sessions. So I'm going to reiterate again. The following are a few prevalent examples of psychological barriers which, if gone unchecked, can mean margin calls for your live account. Greed, right? So let's say you have a plan for a take profit and stop loss and deviate because you have a good feeling about one, right, about a trade. You're watching an On It or an AIT or something else, and the moderator, the coach is like, oh, this is like solid. It doesn't get any better than this. This is a bet the farm type of trade, right? And you're feeling really good about it, and they talked up this trade. And yesterday they talked up the trade, and that won big. And the day before they talked up the trade, and that won big. And now today they're talking up the trade. And you think, I've got a good feeling about this. And you trade it, and it wins big. And then the next day they say the same thing, and you trade it, and you lose it. And you lose everything that you earned the previous day, maybe even more. It sucks. You have zero control over that situation. You're in uncharted territory. How are you going to make that loss up? You have no plan for it. You're just hoping, right? You get caught up in the moment. You got greedy, and you were just hoping that it worked out. Great, it worked out. But the problem is that when it works out, you don't just do it once and that's it. You usually do it again and again and again until it becomes a habit. Think about it. How many of you guys had a trade plan in the beginning that was really simple? Really simple. And you thought, well, it's not working the way I thought it would, so I'm going to add this, or I'm going to add that, or I heard about this, or I heard about this 2x4, I heard about this, gray dagger, I heard about this dirty pressure, I heard about this pressure convergence or clean pressure or whatever. I'm going to add that in addition to what I'm doing, and I'm going to add these other things, because if I add all these things, then it's going to be a really great trade. No, it's just going to be confusing and complicated. It's not going to make you any better as a trader. It's not. What's going to make you a better trader is committing to one thing, mastering that thing. That will make you a professional day trader. That will get you rich. That will get you to 7 figures. You're not here unless you want to be there, unless you want to be at 7 figures as a day trader. And right now that goal might be too lofty for you. So maybe you're thinking 6 figures. Maybe you're just thinking a couple $100. Great. All of those are garnered the same way, the same disciplines. Whether it's $50 or $500 or $5,000 a day. If you're going to do it consistently, they all require the same discipline. So what does it matter if it's 50 or 5,000? If it requires the same discipline, the same amount of work, they may as well shoot for the stars and keep going. It doesn't take any additional work. But for some reason, we get it in our heads that it has to be complicated, so we continue to complicate it. If we have more indications in our favor, if we use more of the indicators, if we use more lines, if we use more, right? That does not create a better, more robust trade plan. It does not. It just complicates it. Okay. Fear. Taking a few losers in a row has caused you to second guess your strategy. And now you're too fearful to pull the trigger or remain in a trade until either take profit or stop loss hits, right? So you've got your trade plan, 10 pip stop loss, 10 pip take profit, right? And the trade goes up a little bit. Let's say this, because I see this really common, 9 pips. Let's say it goes 9 pips, and then it goes down. And now it's at 7 pips, right? So your stop loss is right here at 10 pips, and your take profit was right here at 10 pips, and you just missed your take profit, and now it's going down to your stop loss. It's almost there, right? It's at 7 pips, so 3 more pips and you're out, right? And you're like, well, I missed it by 1 pip. I'm going to get out of that trade. and you pull it, right? And sometimes, yeah, it would have gone down and hit your stop loss. But right there, you made it's not about that one trade that you saved yourself from. It's not even about that one trade that went back and would have taken profit. It's not about either of those. It's about not being committed to your trade plan. It's about deviating from your trade plan because of fear, not because of logic, not because of anything else except fear. Because if you absolutely knew that it was not going to go back up and it was actually going to go down, then why did you not take another trade down from that point? Which you shouldn't have done, by the way. That's dumb. Don't do that either, right? Because you haven't backtested that. But if you were so certain of that, right, then why? Because you weren't certain. You were just afraid. You were just fearful right here. So you pulled the trade, not because you thought it was going to continue to go down. Because if you knew certainly that it was going to continue to go down, if you somehow had a crystal ball, then you would have traded down from that point. But you didn't, right? You just closed your trade because you got afraid. It's not because you knew it was going to go down. It's because you doubted that it was going to go back up. It's because you were afraid of hitting that loser, even though that's what your trade plan calls for. That 70, 60, 80, 90, whatever the percentage is, that it's going to hit that line. So let it do what it's supposed to do, because at least it gives you a chance that it'll come back and take profit. But if it doesn't and it goes down and hits your stop loss, okay, that was part of the plan. Suck it up. Right? We get fearful about those things. Or we remove our stop loss, or we try to move our stop loss further out. That's stupid. That makes no logical sense, right? Because now you're increasing your risk. It just makes no sense. And now you got to make up for that, right? And it's most frustrating when you're using 2-to-1. You've got a 20 pip stop loss and a 10 pip take profit. And you've got 4 winners, and you've got 1 loser, right? One more loser is going to break you even. But instead, you decide you're going to move your stop loss further because you want it to win. And then it goes further, and now what would have broke you even now makes you negative. Now you got to make that up. So now you got to take 3 trades in order to dig out of that instead of just 2 to come back to, or 1 to come back out of. So you got to get 2 trades to get into even, right? Versus 1 just to, come up. Okay, so you got to look at it logically. You got to bring yourself back to your trade plan. You got to ask yourself those questions, the ones we talked about earlier, right? Is this my setup? Is this the time in which I've tested? Is this the currency pair in which I've tested for? What's my stop loss? What's my take profit? What's my risk percentage? Okay, I've got all of that. Are all of those things present? Yes? Excellent. Execute. No? No, don't execute. Maybe? No, don't execute. On it trade comes out. They take a trade. You've been 3 losers in a row the last day and a half. You start thinking, man, I trust this coach better than I do myself. I'm going to take that trade. Okay, is that your setup? Yes or no? Is that the time in which you've allocated a trade? Yes or no? Is that the currency pair in which you've allocated a trade? What's your stop loss? What's your take profit based on your back testing? What's your risk percentage? Are any of those no's? Are any of those not certain? Then don't take it. What if, okay, yes, it is the time in which I've allocated a trade. Yes, it is the currency pair. Okay, I know the stop loss they're using. I know the take profit they're using. I know the risk they're using. Great. Is it your setup? No, it's not my setup. Then don't take it. Then don't take it. That's it. All of these have to be yeses. If they're not, then don't take the trade. Boredom. Perhaps you've made a plan to take a certain amount of profit for each day, and you find yourself reaching that goal rather quickly. Right? You go for a 2% trade, and it catches really fast. And you got your 2% for the day in 6 seconds. But you've allocated 2 hours to trade. And so now you're sitting there, watching paint dry, but you're done for the day. You should be walking away and doing something else. But you're sitting there because you haven't gotten your fill of day trading for the day. You're hyped. You feel good. You feel like you're calling them good. Maybe you're 4 days in a row winning, right? And you start thinking, oh, man, that went too fast. I still don't have it out of my system. I want to get back into the market. Don't do it. Or you've sat around multiple days in a row waiting for your setup and have yet to see what is necessary to execute your trade. You're waiting for something specific, right? Your yes, not your no, not your maybe, but your yes. At the times you're available to trade, on the currency pair you're available to trade, right? And the setup that you're looking for. And you see something that looks close, and it's been a couple days since you've taken a trade. You start thinking, well, it's a maybe, right? It's a maybe, let's face it. But you say, you know what, I'm just going to go ahead and go for it. Because I saw this video that Hiram did, or that Tyler did, or Troy, or Jared, or Dale, or whoever, right? And I see these other things here, so I'm just going to go for it. Again, the worst thing that could happen in that situation is that trade works out for you, is that you make profit on that. It's the worst thing that can happen, because now you're convinced of something that you have zero proof of. One time, it happening one time is not proof, right? Let's say you've got a tree outside and lightning strikes it. Well, we know about lightning. What's the likelihood that lightning's going to strike that tree again, the next time, right? So you're not going to put any eggs in that, knowing what you know about lightning, you're not going to put any eggs in that basket. But if you look at the statistics, when lightning struck, it struck that tree, right? Okay, so you could say that next time lightning strikes, it's going to strike that tree based on the one other time that it did it. No, you know that is not logical, okay? That's not logical. Why? Because of what we know of lightning. It never strikes the same place twice. Or maybe never is a strong word, but it doesn't usually, right? Okay, so it's the same thing here. Why do we then convince ourselves that when we do something stupid, that we've figured out some kind of secret to day trading, and we're going to keep on doing that stupid thing because that's what's going to make us win? It's still stupid, and eventually it's going to cost you because you're going to deviate from your plan, your scientific and mathematical plan for success. How bad do you want this? Do you want it bad enough that you can commit to a simple trade plan every day? So stay away from these, right? Greed, fear, boredom. Okay, I'm going to show you guys some examples. So this is, and I showed one similar to this on the sweep on Friday, last Friday, so you guys can go watch that if you want. Now this is a self-funded account, and I just started the balance at 2,000. Okay, and this is actual trade data. And this was for a 5% risk per trade, 75% win rate, and it was a 2-to-1 risk to reward. Okay, so 75% of the time you're going to win 2.5%, and 25% of the time you're going to lose 5%. Okay, now check this out because I want you guys to see what it takes. All right, so right here you start with 2,000. You take your first loser immediately. You're negative. 1, 2 trades, 3 trades. So 2 trades, you're negative. This is 2 trades a day, by the way. So right here is 1 day, and right here is 1 week. 1 week. Okay, and at the end of that week, you're up $400. And then by the end of the second week, you're only up $200, $240, right? Okay, so check this out. Look at this. Nice streak of winners. But what do we see? Losers, right? And that's why I made them red, so they stick out. Because this is where we struggle. Okay? Loser, loser, winner, loser, winner, winner, loser. This is 2-to-1, so 2, 4, minus 1, so that's 3. 5, right? Negative 5, negative 4, negative 3, negative 5, 4, 3, 2, negative 4, negative 3, 2, 1. Okay, back to whole a little bit, right? And then back 2, up 1. So negative 1, negative 3, negative 5, 4, 3, 2, 1. Back to even, right? Profit, profit, and then step back 2, step back 4, 1, 2, 3, 4. Back to even, right? So look, 2,341.39, right? And that's kind of where we were on the second week, right? We're only like $100 more after a month, right? $100 more after a month. and we were there within the first 2 weeks. We haven't gotten much. We only made $100 extra from the 2-week mark 2 weeks later. Right? It sucks. It hurts. But there you are, $2,341.39. Okay? That's 1 month. So we're only $300.41 up for a month. That's not even $50 a day. Right? That's like 20 trade days. That's like $1.50 a day. Okay? Look at this. Look at this. Okay? This right here. If I took all these numbers right here for that month, it's $741. Okay? 41 to 80. Okay? $741. But look what you had to go through. Loser, winner, loser, winner, loser. That sucks, right? Streaks of winners. Great. Now look at this. Remember, look, this is 2, 3, 4, 5, 6, 7, 8. That's worth 4 trades right there. 4 losers. 8 winners is worth 4 losers. Okay? Look at this. 1, 2, 3, 4, 5 losers in a row. Boom. $934.63 in loss. Okay? Right here, it sucks. Right here, it sucks really bad. Right here, it's hard to pull the trigger. It is hard to pull the trigger after you've had 2 losers. But is my setup there? Is this the time that I've allocated to trading? Is this the currency pair in which I've traded? What is my stop loss? What is my take profit? What is my risk percentage? And then what do? We push the button right here and we lose. Then our next trade. Is this my setup? Is this the currency pair? Is this the time in which I've allocated to trading? What is my stop loss? What is my take profit? What is my risk percentage? And then what do? We execute, and then we lose. Believe me, by the time you get here, you don't want to push the button. You're thinking, this is bust. It's just a bad day. I shouldn't take these trades. It's just a bad day. And what happens? What if you don't take that trade? And what if you don't take that trade? And you're like, see, they would have lost. Right? But now you've made a habit of not taking those trades. You still have these 3 losers. Okay? You didn't take that one, you didn't take that one, and then you don't take this one. You needed that one. You needed this one, just like you needed all these other. You don't know where they're going to happen. Believe me, you start making a habit of not pulling the trigger, and you're going to do it when it matters. You're going to not pull the trigger when it matters. You need these trades. You need these winners. The losers are going to happen. Accept it. Believe me, you're going to get fearful right here. You're going to not want to pull the trigger. That's why you got to go back to those questions. They work twofold. Is this my setup? Yes. Is this the time in which I've backtested? Yes. Is this the currency pair for which I backtested? Yes. Okay, when it's time to go, what is my stop loss? X. What is my take profit? X. What is my risk percentage? X. What is my lot size? X. All right, now what do? Push the button. Enter the trade. Set your parameters. Let it do what it's going to do. It's going to lose 5 times sometimes. It's going to happen. You can't skirt it. You can't get away from it. It's going to happen to you. What would suck is you take these 5 and then, or these 3, and then you don't pull the trigger, or maybe 4 of them, you don't pull the trigger on the 5th one, you don't pull the trigger on the 6th and 7th, but you see, oh, they're starting to win again. And then you pull the trigger and it loses, and you think to yourself, every time I place a trade, it loses. That's how it starts to feel, right? Loser, 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 winner, winner, good. Okay, it's starting to feel good again. Loser, dang it, these 2 winners didn't even feel like they mattered, right? And you get these streaks of winners right here. Look, 2, 4, 6, 8, 10, right? Because it's 2 to 1. So each of these are worth 2 winners, 4, 6, 8, 10 winners. 9, 8, because you got 2 winners right there, right? And then back to 10. We're negative 10 winners. 9, 8, 7, 6, 5, 4. All right, we're looking good, right? But back up to 6. 5, 4, 3, 2. So we're only 2 winners behind. 4, 6. Now we're 6 winners behind. 5, 7, 6, 5, 7, 6, 5, 4, 6, 5, 4, 3, 2, 1. Now we're back into, where we started after that sequence began, right? So that's 3,200. We were at 3,500 when we started that sequence. 2 months in, we're only $1,000 up, $1,061. Okay, in this sequence. That was a bad couple weeks right there, right? But you take the good with the bad. Okay, we're $1,000 up. In spite of all these losers, guys, look at all those losers. In spite of all that, we're still $1,061 up. 2 months in, 40 trade days, right? Or 80 trades because it's 2 trades a day. Okay, let's go to 3 months. Look at this. This month is not much better, right? Look at all that. 3 months, we've doubled our account and then some. Actually, we doubled our account right about here. So 1, 2, 3 days before the 3rd month was up, we doubled our account. Now we're at 4,800. 4,800. 3 months in, we're at 4,800 from 2,000. So we're more than double our account. Okay? Let's go to 4 months. 5,700. 5 months. 8,200. 6 months. 8,900. We still have bunches of losers. 8,900. 7 months. 14,000. 8 months. 18,000. 9 months. 21,000. 10 months. 31,000. 11 months. 49,000. We've made almost $50,000 a year from $2,000. 12 months. $64,000 minus the $2,000 starting balance. $62,000 in day trading for that year. Some of you guys don't make that in a year at your regular job. Some of you guys make double that. That's a supplement at best. At worst, that's a supplement of income. At best, that's a replacement of income. Actually, at best, that is you've superseded your income. 12 months. What did we do? Did we change the trade plan? Did we take more profit? Did we take less profit? Did we move our stop loss or take profit? Nope. All we did was continue to take the same stinking trade twice a day for 12 months. The same. It's boring. The same. It's not sexy. We didn't learn something new. We didn't have this new epiphany. We didn't become the experts of everything. We didn't become the end all be all, the know all. We didn't become anything more than what we knew on that first trade, which is your setup, the time in which you're going to trade it, the pair in which you're going to trade it, your stop loss and take profit, and your risk percentage. That's all you knew on this trade, and that's all you knew when you made this final trade 12 months later. That's it. You didn't know anything more. You didn't know anything less. That's all you knew, and that's all you did. That's it. That's it. None of you guys have done this. Well, maybe some of you. But some of you guys have not done this. Just committed to one thing, one simple thing for a year. You're still trying to find the shortcut. And guess what? The shortcut, in a year, you're not even close to this. Maybe you're still negative. Maybe you haven't even made profit yet. And you're wondering why. Even though I sit here and I yell at you about why all the time. Right? One thing. This is not an on it trade. This is not a SAT AIT. This is not an alert. Maybe it's an alert if you backtested that. It's just one thing. One. Maybe you've got one thing, but it didn't get you enough, so you got one thing on 2 currency pairs or one thing at 2 separate times. But it's just one thing, one simple thing, one setup. You don't have to make it more complicated. You don't have to make the setup more complicated. You don't have to know more about the setup. You don't have to know more about the market. You don't have to know about all the announcements. You don't have to know about all the trade setups. You don't have to know how to read all the indicators. All you have to know is that one thing, that one setup, and backtest it. All right, let's keep going. That was 12 months. 13 months, 63. So we only went up, actually went down, right? Look, 64,000, and now we're at 63,000, right? 13 a month later, 14 months, 110,000. Now we're into 6 figures. 15 months, 131,000. 16, 171,000. 17, 245,000, $250,000. 18 months, 385,000. Okay, now watch this. We get to 768,000. This is what I recommend. Bring that back down to 500,000. So you withdraw 256,000. 256,442 or 256. What is that? No, 268. Whoops. I copy pasted from the other one. 268,000. 218.92. 218.92. So it's the excess of 500,000. So then you go back to 500,000, right? So right here you're making about 23,000 on a winning trade. Now you're making 15,000 on a winning trade, okay? And you're losing about right there. You lost $33,000 on one trade, okay? Now watch. So let's go back up to 750,000, right there, close enough. 745,000. So we withdraw 245, 358, 53. Now we're back to 500,000. So we've now withdrawn about $500,000. Okay, and then 500,000. Let's go back to 750,000. This is 24 months. So right there, we've already withdrew $500,000. That's 2 years, and we've withdrawn $500,000, and now our account is at $723,000. So if you're doing the math, you already almost have $1 million. If you cashed out right now, actually it would be more than that, right? It'd be 1.2 million and some change, because you would have $723,649 and almost 500, about 500,000 that you've already withdrawn. So 500 and 700, that's $1.2 million. 24 months, you have $1.2 million that you could stop right now and just have $1.2 million. That would be stupid, because it's worked for 24 months. Why would you stop? Right? Okay. So you have $500,000. And then right here, you withdraw another almost $250,000. 739 to 1732, so 239 to 1732, bring it back to 500,000. So you're $750,000 to that point. That's just beyond 24 months. And then here, withdraw, bring it back to 500. And then here, withdraw, bring it back to 500,000. Okay, so right here, 2, 3, 4, 5 withdrawals in 2.5 years, and that equals 1.25 million. Can you do this for 2.5 years if it's 1.25 million? Not take out from this account until you get to $750,000 in your account, and then withdraw 250, and then keep 500 in there, and just every time it gets to 500 or 750, withdraw 250, keep 500, keep going. Check this out. From here, your withdrawal, your first withdrawal, right? There weren't any before that. From your first withdrawal, 2 trades a day to right there is 64. So 2 trades a day, that's about 32 days. 32 days, there's about 20 trade days in a month. So that's about a month and a half, and you've made another $250,000. Okay? Right here. From here to the next one is 73, so about 2 months, and you made another $250,000. Okay? So let's just say it 2 months at a time. So 8 months, you make $1 million. In a year, you're making more than $1 million, and you still have a $500,000 account that you're keeping rolling and making more money. Last I checked, $1 million is 7 figures. This is hard math. I'm not making it up. These are trade results. Winners, losers in chronological order. Same trade, twice a day. Some days 0, other days 4, some days 1, other days 3, but an average of 2 a day, right? And the end result, 7 figures. Took 24 months. Is that too long for you? You want it faster? Fine, go and back test some more. And next week, we're going to talk about the rinse and repeat process. How do we do that? How do we introduce another trade setup? We're going to talk, there's a process for that. So there we go. So now we have 1.2 after this withdrawal right here, 1.2 million and some change. And then our account up to this last 1,025th trade is at 561. So we have another $61,204. So we have 1.2 mil that we've already cashed out. So we have 1.7 and some change. Let's just call it $1.8 million, almost $2 million. And we're only, if this is the 24-month mark right here, and every 2 trades is a day, then this would be 50 days. So 2.5 months, right? 20 trade days in a month. So 60 would be 3. So 50, 100 trades would be 50 days. 50 days, 20 trade days in a month would be 2.5 months. So 26.5 months, and we have almost $2 million. In the last 10 years, did you earn $2 million? In the last decade, have you earned $2 million? But for some reason, whatever you're doing is worth doing day in and day out. Going to your job religiously so you don't get fired. Working hard so you can get a 25-cent raise every year and a half. Doesn't even keep up with inflation. Right? Pinching pennies. The last 10 years, did you make $2 million? In the last 10 years, did you make $2 million? So what is the next 2 years? What is that? What is that in the grand scheme of things? It's 20% of the last 10 years. Can you do it? Can you commit to something simple? Can you stop taking stupid trades? Can you stop trying to take the flavor of the month's trade and changing your whole trade plan because you had a crappy week? Because believe me, there's a lot of crappy weeks I stopped making the red marks because I don't want to go through the whole thing and make red marks. But if we go up here, you can see, look, these are crappy weeks. Look, that's a crappy week. Right? I mean, you still made 18 grand, but look at all those losers. That's a crappy, there's a lot of just, I mean, look at this one. This is just like blood red. That's $6,000 loss right there. Just from that point to that point, right? That's 29 trades. That's 15 days. If that's where you started, right there, okay, 15 days, right there, you would have gone from 28,000 to 23,000. Actually 22,000, because that's the balance after that loss. 22,000. You would have lost $6,000. $6,000 from right here to right there. Right? So what is that? So 28,000 and 6,000. So equals that divided by that times 100. 21.42% of your account you lost right there. It sucks sometimes when that's where you start, because you start losing hope, right? Now, by the way, when this person first started this trade plan, they weren't risking 5%. They weren't risking 5%. Matter of fact, a lot of these trades that are in here right here were not done at 5%. It wasn't until it became significant and they had a beat on it, and it was just like second nature to them, right? 500, maybe more trades. It was definitely more than a year, so it's probably beyond this point right here, okay? At first, it was like 1%, so they were making 0.5% on each of those trades, which obviously the numbers would look a lot different, okay? But right after they felt like they got the hang of it and they were good, because that's what their psychology needed. Maybe you don't. Maybe you can start off hot, right? That's what their psychology needed. Then they started trading 5% on it, and 2.5% growth, and that's when the exponential growth happened. The other thing is they didn't start at 2,000. They had more than just 2,000 in there, so that's another thing that obviously helped this person. But their numbers, their actual numbers, didn't look this way. They actually started off in terms of percentage of growth a lot smaller. right? Relatively closer after a couple months, only because they had a larger account, not just a $2,000 account, right? But in terms of their growth in percentage, it was 0.5%, not 2.5%. And then after a while, I was like, okay, I've got this down to a science. It's working really well, and it's paying me. I've left money on the table, so now I'm going to do it right. So like, okay, I'm just going to do 5%. Boom. And then took off from there. By that point, their account had obviously grown quite a bit. I think it was like a double up and a half or something. So obviously not as exponential, but this one's taking, after a while, 5%. So imagine what it's going to look like, or what it started to look like at that 12-month mark going forward, right? All I'm saying is that if you're using a static lot size, or you're undercutting yourself, the only reason you're using a static lot size of 0.01 is because you're afraid. It's not because it makes sense. It's not because it's mathematical or scientific. If you're so afraid, why are you even putting that trade in to begin with? If you're not going to put it in at the risk percentage that it calls for, why are you even putting the trade in? You're already setting yourself up for failure. You're already giving yourself an out, saying, well, when I lose, I'm not going to lose that much. Well, when you win, you're not going to win that much either. Which one are you going to favor? Which mentality are you going to favor? It's not greed. It's just saying this is what makes sense mathematically and scientifically. I'm going to use this percentage. Jordan says, even in backtesting, I cringe if I see a few go against me in a row. I guess that shows my fear I still need to overcome. Thanks for this example of trusting your mathematical advantage, i.e. backtesting. Yep, absolutely, Jordan. Right? We all do it. We've all done it. We've all been there. It's nice to be able to backtest and see these laid out chronologically, because it's ugly. Look at this. First trade, you lost, right? You hit a streak of winners, right? But who knows? What if before this was like the 5th loser in a row, right? But you only saw that one because that's the one you actually took. You had a streak of winners, losers. I mean, look at all these losers right here, right? Right there. You only made $30.88. I mean, you made a profit, but look at all those losers. Stick to it. Stick with it, right? This is the winning formula. Believe me, we've gone through this back and forth. When we started, we realized a lot of these things the hard way. Now we're giving you the clear path. The clear path. Just dedicate to one thing. One thing. See where you're at in 6 months. See where you're at in a year. Believe me, by that point, you're going to be like, man, I'm callous to everything else. I'll watch these on AITs and stuff because they're there and they help me grow as a professional day trader, but I'm not going to take those trades. But how else are we going to show you what it looks like? You know, when Senior first took trades with members, let me rephrase that. When Senior first did the overnight impact trade, he wasn't taking the trade with his members. He was taking the trade at 3 o'clock and then reviewing the trade he took at 4 o'clock. And what did people do? Because this is how we are. They said, okay, Senior took a trade for 50 pips down or 10 pips up or whatever it might be. And it's gone, since 3 o'clock when he took that trade, it's only gone 5 pips negative. So I'm going to get in because now I'm positioned better than Senior. Right? Well, what if that trade lost anyway? It's because sometimes they did. Senior didn't always win. Nobody always wins. Right? So then it just became this thing where they were just mimicking the trade that he took, not learning from his knowledge as why he took that trade. It was the why that mattered to those of us that paid attention in the right way. Why did you take that trade? What were you looking at? Because when I see that, I don't see a buy or a sell. Or I see a buy and you see a sell. Or I see a sell and you see a buy. Why do you see what you see and I don't see it? Right? That's how you need to approach it. Maybe look at a trade and say, this is what I would do in this situation. Okay, why are they going to do something different? Put them both in a demo account, see which one wins. And see, okay, why did mine win or why did theirs win? Was it luck? Is this just the way it happened? What is it? Is this consistent? Am I just looking at things in a different way? Because the other thing is don't say to yourself, well, that's a coach, they know better than I do. Because believe me, there was a time where I was you. And I said, well, that's a coach, I should trust him. But then after a while I realized that coach doesn't know what they're talking about. And by the way, a lot of the coaches that were around when Tim and I first started aren't here anymore. They're not here anymore. And there's a different checks and balance for coaches now. We had to evolve. We had to get better. At some point, maybe you'll become a coach. At some point, you may know more than I do. I hope. Otherwise, what are we doing here? At some point, you may know better than anyone else in the organization. You may be that person. Somebody's got to. This has to evolve. Where's the evolution? Somebody's got to do it. Somebody's got to be the new all-star. We're not going to want to do this forever. Somebody's got to step up. But believe me, you do these things religiously, you let it get you rich, and then you figure everything else out. Because at this point, if this is all you did, I can teach this to a fifth grader, they can do it, and they can become wildly successful. And then they can learn everything else. You guys are trying to learn everything. Every new exciting trade setup, you think that's going to give you the competitive edge, as if you don't have to backtest that too. The only reason you're doing the flavor of the month is because you don't backtest. It's because you're waiting for the easy pill. You're waiting for somebody to say, this is the answer to all your woes. Just do this and you're going to be wildly successful. And you want to believe that, but in your heart of hearts, you know that it's not true. But you want to believe it so bad that you get high on that hopium and then you crash and burn. And who's to blame? In your mind at that moment, everyone else, not you. Of course not. But guess what? If you're here, if you're on the mastermind, if you're listening to my voice, and you've been shutting me out for the last hour, that's no excuse. You've heard it, you know it, you have all the available resources to become a seven-figure day trader, and you're not doing it. You're the only one to blame. If you don't like that, there's a red X on the upper right of your screen. You can just X me out and never listen to me again. It's not going to change the fact that you're not going to be successful until you do the things that you're supposed to do. It doesn't matter if you hate me for saying it. It doesn't matter if I pissed you off. It matters not. It is fact. If you don't do these things, you're not going to be successful. It doesn't matter who you blame. You might be comforted in the fact that there's somebody else in your mind, the presumable fact that there's somebody else to blame. Whether there is or isn't someone else to blame, the fact remains you are not successful. If you want to remain there, then continue to be a victim. If you want to remain there, continue to blame everyone else. Otherwise, pull yourself up by your bootstraps. Do something about it. Or cry somewhere else. Because I ain't trying to watch it. That's all I got for you guys today. It was harsh. If it was too harsh for you, it's probably because I'm talking to you. If you're offended, tough. You needed to hear it. If you don't want to hear it, you don't have to listen to me. But let's face it, you paid me to tell you that. So either stop paying me or listen up and do it. That's it. Thanks again, guys. We're going to pick up next week with rinse and repeat, which is very, very, this is clutch, guys. Especially for those of you guys that have backtested and you see that the one thing that you backtested is not enough to get you to anything significant within the time that you're available. Maybe the backtesting, you're only taking a trade every 3 or 4 days. So you need to add to that so you can get to your goals in a reasonable amount of time, or you want to just add some more and you're ready for that. That rinse and repeat process, there's a way of doing it that is going to be most successful. I'm going to teach that to you guys next week. This is, of course, another thing that we've learned by way of trial and error. Watch this video. Watch the other parts of this video all together multiple times. Write it on the tablets of your heart. Commit it to memory. Tell other people about it. Teach other people about it. Learn it. Commit to it. Dedicate. Push. Persevere with it, and you will be successful. Give yourself time. Master one thing. Let it get you rich. Then figure everything else out. Appreciate you guys' time. We'll look forward to talking with you next Tuesday for the rinse and repeat process. Have a good one and happy trading. Thanks.